Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Stocks traded little change early Friday as ICE Brent crude oil hovered around $100 a barrel. Rising oil prices pushed the S&P 500 lower on Thursday to finish the session down 1.5% and 4.7% from its all-time high. Today, Wall Street will respond to new inflation data released at 8:30 a.m. Eastern, in addition to developments related to the ongoing conflict in the Middle East. Here's what else is on tap this hour. The IIT conference, which is described as a historic global gathering of visionaries, entrepreneurs, and change makers, will kick off in California in late April. Its chair, Sushi Tripathi, will join us to share more about it. And speaking of conferences, I was at the ICR Consumer Conference in January, where I met with Hint Water CEO Michael Pengue, who shared with me why the subtle flavors in Hint keep customers coming back. Stay tuned for that interview later in the show. And at 9:30 Eastern, NYSE listed ServiceNow, an AI company that streamlines enterprise workflows, will ring the opening bell. Its chairman and CEO, Bill McDermott, will do the honors up at the podium. But first, investors received fresh data earlier on the state of inflation with the release of the January PCE price index, aka the Fed's preferred inflation gauge. According to the BEA, headline PCE rose by 2.8% year over year. Meanwhile, core PCE, which excludes the volatile food and energy sectors, increased by 3.1% from the same time a year ago. This is a delayed report, and these figures notably don't include the recent gain in oil prices. We're going to dive into those numbers later on in the show, but first we're going to take a look at how the conflict in the Middle East is impacting oil prices, with ICE Brent crude around $100 a barrel. Joining me now to talk oil and gas markets is Nitin Kumar, Senior Equity Research Analyst from Mizuho Securities. Nitin, welcome to NYSE Live.
Good morning, and thanks for having me.
So the conflict in the Middle East has driven much of the market action this past few weeks. What are the biggest economic implications?
Well, I mean, clearly the first thing is the oil prices. As you mentioned in your opening monologue, oil is around $100 per barrel. This is really about whether oil will continue to flow through the Straits of Hormuz. As you know, it accounts for about 20% of oil flows globally. And even with some optionality to move oil to the West Coast, you can see an outage of somewhere between 6 to 8 million barrels. That is pretty meaningful. And I think that's what the market is reacting to right now, with oil prices up almost $30 since before the conflict. Obviously, that has knock-on effects for the economy. Gasoline prices are up, diesel prices are higher, jet fuel is higher, so it'll have knock-on effects. Fertilizer prices are higher, so higher oil then starts leading into inflation for other downstream products.
All right, and ICE Brent crude oil did hit $100 a barrel yesterday. What else should investors know when it comes to oil prices and oil production?
Well, I think there are two things that are very important for folks to keep in mind. One is the duration of this conflict. So heading into this year, most forecasts and investors felt that there would be an oversupplied oil market in the first half. We were thinking about somewhere between 2 to 4 million barrels of excess oil on the market. Our own internal view was a little bit more bullish, but ultimately, we were also expecting oil to maybe be in the low 60s for the whole year. Now, for longer this conflict continues, and let's say it's about 7 million barrels, you're starting to eat into that excess inventory or excess supply of oil. And just 1 month of the current situation could lead to instead of being somewhere between 2 to 4 million, you could be looking at a balanced market or maybe 500,000 barrels of oversupply. So that could really correct the long-term oil price very quickly. And I think that's what investors need to focus on. Obviously, the short term matters, but the longer this continues, you could go from the mid 60s for 2026 to somewhere in the mid 70s very quickly. And that has implications not only for the economy, but for the oil stocks themselves. I think the second thing we're focusing investors is, we already saw a little bit of a rotation into the sector. The XOP was already up 25% ahead of this conflict, and so you're seeing kind of a dual benefit of higher commodity prices and sort of the sector coming back into favor a little bit.
All right, and will U.S. producers, how will they respond to higher commodity prices?
That's the most important question to some extent. I think the U.S. producers have held on to capital discipline. That doesn't mean zero growth. What it means is that they want to see a structural shift in the price of oil. So not just the spot or the front month, but somewhere between 12 to 24 months. And as I said earlier, this conflict could have the impact of stabilizing that longer term view of oil above what people were expecting. A lot of companies gave their 2026 budgets just here in February. They used somewhere between $55 to $60 oil WTI to set their budgets. I think the producers are waiting and watching. They're not going to commit to increasing capital immediately. They want to see whether $70 oil or higher is realistic, but they have the ability to accelerate. The U.S. has plenty of reserves, and especially as oil prices go up, those reserves become more economic. We are the short cycle producer, and we are a free market economy. So I think the U.S. producers have the ability, but they're going to wait and watch and see how this develops before committing capital, because it does take about 6 months to get production online.
All right, and how else are the attacks on Iran impacting the energy markets?
Well, the other big thing is LNG markets. Qatar has, I think, roughly around 20-25% of the LNG supply in the world. That is raising gas prices. Natural gas in the U.S., those prices were a little bit weaker to start the year. The winter was not as cold as we had expected or anticipated. What we're seeing now is that with new LNG facilities in the U.S. coming on, we're seeing a utilization rate of roughly 95% for current U.S. LNG, and that is expected to remain strong. Again, the longer this continues, and that should pull up natural gas prices. The natural gas strip right now is somewhere between $3.50 and $3.75 for the year, but we think that it could go higher just because, yes, the weather did not cooperate, and we didn't draw inventories as quickly as we expected, but we also saw a cold wave early in the year that led to gas prices in the $7 range, and also markets are tight. With increased structural demand, power generation, industrial demand, LNG, we don't have as much inventory on a relative basis in terms of days of demand. And so when there's any extraneous shock to the system, gas prices can move pretty quickly. So we're pretty constructive on gas prices. Obviously, oil has a higher upside just given that it's the primary commodity.
All right. Thank you, Nitin Kumar, Senior Equity Research Analyst from Mizuho Securities. Up next, the IT 2026 conference, a celebration of 75 years of the Indian Institutes of Technology, will kick off in Long Beach, California on April 22nd. Its chair will join me to share more about the event.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. The Indian Institute of Technology bills itself as the MIT of India. It will be hosting the IIT 2026 conference in Long Beach, California from April 22nd to the 25th to celebrate 75 years of IIT excellence. Joining me now is Sushi Tripathi, Program Chair of IIT 2026. Sushi, welcome to NYSE Live.
Thank you so much, Ashley. Thank you for having me, and good morning.
Welcome. What is the origin of IIT and this conference?
So IIT was first established in India in 1951 when we got independence from UK. And so now we are celebrating 75-year anniversary. And this conference, which we are hosting in Southern California, we do this every year, Ashley, and we are super excited to have this conference in Southern California.
What is the mission of the conference?
So, mission of the conference is to gather the highly intellectual individuals, professional technocrats, business professionals, where we elevate the value of technology and business into our community. And also in the process, improve the value of the brand value of Indiaspora. You may know, Ashley, that Indiaspora in US represent 2% of the population, but we are delivering 8% of economic value in US. So through this conference, we want to highlight the brand value, but more importantly, connect with the community and create the value of technology and business into the community.
And I understand the lineup includes speakers from OpenAI, IBM, CVS, and Canva, among many others. There is even a full-day NVIDIA workshop. Which programs are you looking forward to the most?
So I'm glad you brought that up, Ashley. So on April 22nd, we have a full-day golf. Then we have NVIDIA full-day workshop. We are doing a workshop on go-to-market strategy. And then starting April 23rd through 25th, we have some amazing speakers around artificial intelligence, health and sustainability, investment, and global connect geopolitical issue. As we all know what's going on in the modern world, current world right now. And so we have speakers like Guy Kawasaki, Vinod Khosla, President of Cisco G2 Patel, CTO of AMD, Mark Papermaster, Chamath, and then head of AI at Amazon. Amazing speaker lineups are coming in California, Ashley.
How big of a storyline do you think AI is going to be at the conference?
Amazing, a lot. So as you pointed out, we have a full track on artificial intelligence. We have head of CTO of OpenAI coming and talking. We have head of AI at Amazon who is coming talking. We also will have the AI mission, which was just held in India. Approximately 200,000 people attended that conference. The CEO of that conference, Abhishek Singh, he will be coming here and talking. So a lot of conversation is going to be there around AI, all the way from infrastructure layer to LLM, to agent, to enterprise AI, to agentic AI. And then we are going to set some tone around how human AI, the agentic layer, the intelligent layer is going to play a role into the future. So a lot of conversation around AI is going to happen in this conference, Ashley.
And what do you think the current trends are shaping the AI landscape?
Amazing. I'm optimistic, Ashley. I would say AI is changing our daily lives. Anything we are doing, AI is playing a role into it, and it's already impacting the business. So there is going to be a major shift with the use of AI as we move into the future, Ashley.
All right, and what are you seeing as the current trends in the tech labor market, including unemployment and areas of opportunity?
Good question you're asking, Ashley. There's a lot of fear that AI is going to take away the job. And if we look back into all the transformation happened over the years, the same fear we had when the internet came. I believe that AI is going to, yes, it's going to displace some job, but it's also going to create new job. Even 5-6 years ago, we didn't have a job like data scientist. Now we do. We didn't have a job like prompt engineer. Now we do. So new categories of job will be created. So I think in net, maybe it will take some time, some transition will happen, but net, I think AI will create more job than it will displace.
And what is the history of IIT and the US tech labor market in our last 30 seconds together?
Oh my God. So we have brought some amazing talents here. You may know the current CEO of Google, IBM, Perplexity, Zscaler, Palo Alto Network. They all are IITians, by the way. And so we are roughly 50,000 alumni network. And so if you look into any tech company in the world, but more importantly here in US, there's a high likelihood we IITians are there, placed there. And we are continuing to add value to the technology and business world.
All right, thank you, Shushi Tripathi, Program Chair of IIT 2026, for joining us on NYSE Live.
Thank you so much, Ashley. Thank you for having me.
I caught up with Hint Water CEO Michael Pengue at the ICR conference in Orlando earlier this year. He shared with me why these subtle flavors in Hint keep customers coming back. That interview up next.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Hint Water was founded in 2005 in San Francisco, and it's been going strong for the past 20 plus years. Its CEO, Michael Penghi, recently joined me to share more about the hint of flavors that have built a loyal customer base. Take a listen.
Hint. Hint is the healthiest product you could probably put in your body, which is water, and it is water with pure natural essence. So from fruits, from herbs, from roots, our ingredient list is very simple. It's purified water and natural essence. So it fits in perfectly with today's wellness lifestyle.
All right, and Hint has been on the scene for 20 years.
Yes.
How do you stay true to your brand's roots while also continuing to innovate?
No, good question. Our ingredient list, our recipe, if you will, is exactly the same as it was 20 years ago. Back to the water and fruit essence. And with that, we obviously have flavors like watermelon and blackberry and pineapple that our consumers over the last 20 years have loved. But we're now expanding into, and really the botanicals and, like I said before, spices and different roots to come up with new flavors. So, for example, this winter we have a winter pack with something called peppermint bark. It sounds different, but consumers absolutely love it. And those types of flavors are bringing in new consumers into our franchise as well. So it's very exciting to have some of these new flavors that we're introducing into the marketplace. Over the summer, we had nostalgic ice cream flavors. So like orange vanilla swirl was a flavor over the summer that consumers continue to request from us, and most likely will be coming back next summer too. So that's how we're trying to innovate. We're flavor focused. We're not getting into anything more complicated. I think consumers are looking for simplicity today, and the simplicity of our ingredient list is what makes us different, and so we focus on flavor.
Do you think flavoring water helps people like water more and enjoy it more?
Without a doubt. Over 90% of people know that water is the best product that they could put in their body, the best beverage. But almost 40% say, you know what, I just don't like it. It's just too boring. And so consumers, when they have Hint, they're like, well, I'm getting that pure hydration, but with flavor. And so, they're able to consume more. It's not a task. It's not like, oh my God, I have to go to the gym or I have to drink my Stanley all day. It's really enjoyable. And we have an extremely loyal customer base based upon that affection for the brand and the flavor.
And how do you keep it healthy while still making it taste good?
That's a good question. A lot of consumers say, oh my God, there's got to be something in this. There's got to be a sweetener. There's got to be, and there isn't. So our lab, our scientists work very, very hard to create that flavor sensation that is true to what they would expect. So when you drink watermelon, like I mentioned before, it's like, wow, this is pure watermelon, without having it be overly flavored. It is a hint. And that makes it more, I think, more drinkable versus a lot of the competition in the marketplace that I think are so much flavor forward or sweeter.
Speaking of the competition in the marketplace, how does Hint differentiate itself?
Well, we like to say we are the water for people with taste buds. So we really focus on people with taste buds. So that's a bit of our differentiation compared to, let's say, a premium water like an Essentia or Smart Water, which is a huge category, by the way. That's a $9 billion category. But we are that water, but with flavor. And so that's what helps us differentiate us from the marketplace. And we are the category of one. We're really the 98% share of the water with flavor essence in it.
What service are you trying to provide to the public with this offering?
Well, I think everybody, is struggling with wellness and trying to keep their life balanced and probably more simple. And I think Hint does that. It doesn't compromise anything. It is really true to what people are looking for. They want to be healthier. They want to eat right. They want to drink right. And when you look at some of the ingredients of beverages that are out there, it's a laundry list of things. And this invites people to come in, be healthy, but only have a flavor to it that helps them on that wellness journey. So I feel like we're in that great balance of what consumers are looking for, especially today.
Do you think if somebody is trying to live a healthier lifestyle, that removing sweeteners from your drink is a good place to start?
A simple answer, I think, is yes. I think consumers, the number one consumed beverage in the United States is water. And I think over time, consumers are migrating to less and less sweet, especially with GLP-1 too. So, whereas a GLP-1 trend, consumers that are used to drinking something that's overly sweet, they're migrating to that's too much for me. So they're migrating more towards water, but also towards Hint. That I think provides that. So there, without a doubt, is that trend to less sweet.
Coming up next, ServiceNow's Chair and CEO Bill McDermott will ring the opening bell. It's always an exciting moment to see the markets open, so stick around.
Today is a new chapter to bring about not just the regulated business, but to add transparency to a new asset class.
We're going to offer a tokenized offering that will enable trade on NYSE tech, but then settle onto a blockchain.
What began as a vision to bring security and trust to the emerging world of digital assets has grown into a leading platform serving institutional investors, exchanges, and financial institutions around the globe.
The NYSE is a storytelling powerhouse. We are building a modern media network. Partnership can be a multiplier. We're spanning industries. We're creating more connections. Partnership built together is right here. And we are the backdrop for transformative storytelling. Because on 11 Wall Street, this is exactly where partnership becomes progress.
We literally have changed the entire baby food industry. To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. In just a moment, NYSE-listed ServiceNow will ring the opening bell. The NYSE-listed AI company streamlines enterprise workflows. ServiceNow's central thesis is to put AI to work for people through one platform, one architecture, and one data model spanning every business function. ServiceNow listed on the NYSE in 2012, and it is headquartered in Santa Clara, California. It has 22,000 employees. Chairman and CEO Bill McDermott will do the honors at the podium. McDermott has declared AI to be, quote, civilization's greatest opportunity of this century, end quote, citing a $22 trillion global market opportunity by 2030. There he is up at the podium with NYSE President Lynn Martin. He's going to ring the bell now. An exciting morning for Service now. At the podium, Bill McDermott, their chair and CEO, ringing the bell, opening the markets. Again, up there with NYSE President Lynn Martin, celebrating artificial intelligence. And the U.S. stock market is officially open for trade. We are off to the races. Joining me now is Ted Thatcher, founder of Bright Lake Wealth Management. Ted, welcome to NYSE Live.
It's great to be here, and it's so fun to see the markets and some positivity this morning. You know, when you look at what's going on in the Middle East, it's like we're in a war against time at this point with everything around the oil discussion and the inflation discussion. You know, we see Brent this morning at $100 a barrel, and so, my goodness, I think you miss a little, you miss a lot. We're all trying to stay on top of it, right?
Well, we saw the markets rise, and we did see a downward GDP revision. Can you talk about how that might impact Fed decisions moving forward?
Absolutely. It's a really important discussion to have, and I'm really looking at it several fold. You know, when we think about growth in the economy, we think about how that affects consumers, and we really have to have a discussion too, I think, about how earnings have grown or not grown for consumers. I think quarter to date, so far this year, we've seen earnings growth in a positive direction. We saw also PCE prices and core come in this morning. 2.8% for PCE prices, 3.1% for that core number, which we know is what the Fed keys in on in the inflation discussion. So if you look at the report, actually, the details show us that the trends are in the right direction, but I just don't think the Fed is going to like that 3 handle, certainly with the 3.1 behind it. And so when it comes to a rate discussion, it's hard for me to see a path toward, you know, lowering of interest rates, even just because of that, until the second half of 2026.
What is your outlook for the Fed for the rest of the year?
I do think it's likely, you know, that we will start to see some more rate relief. Obviously, it has to dovetail with the discussion around unemployment and where those numbers sit. Obviously, unemployment came in hot at the latest print, moving from 4.3% to 4.4%. I would say unexpectedly. We saw those trends coming down. We saw, you know, obviously a lot of good numbers from the CPI this week at 2.5% for core CPI, the lowest number it's been in, I think, 4 years now. But when you compare those, I would say even positive data points to the macro discussion that's being had right now because of the geopolitical conflict we have in the Middle East, it's hard to see how the Fed is going to feel the ability to move until it has clarity around what the ultimate consequences of that war in the Middle East is going to be.
All right, and diving into those PCE numbers a little bit more, what was your takeaway from this morning's report?
Yeah, I really was focused on the core number. You know, again, coming in 3.1% year over year. That number, as we've noted, it really is what the Fed keys in on. Now, if we look under the hood a little bit, that's where I think that we see some more important pieces of data. If you see and you look at the trends there is good data supporting a trend in the right direction with inflation. And so that is what I was looking at this morning. Obviously, I want to see, you know, what happens here with the price of a barrel of oil, because at this point, I think so goes the price of a barrel of oil, so goes the inflation discussion, and therefore how it affects consumers here at home.
All right, and for the viewer, why is PCE data the Fed's preferred inflation gauge? Why are they so dependent on that number?
It's a really important thing to understand, actually, because effectively it filters out, you know, the price of energy and some of the more volatile pieces of what contributes to the consumer pricing index and prices more broadly. So when you get to filter those things out, effectively, you actually get a more accurate view of what consumers' day-to-day life looks like. And at the end of the day, when we look at the economy, we have to have a conversation not just about Wall Street's valuations, but we have to have a conversation about what's going on in the consumer's day-to-day life. And so that's our technical way of getting an idea of what's going on there.
All right, and switching to the Middle East, ICE Brent crude oil is hovering around $100 a barrel. What should investors know when it comes to oil prices and production?
No, when we look at oil production, I, of course, am thinking about the report that the agency, the International Energy Agency, of course, led by the U.S., put out this week. They said that we are now looking at the single largest disruption in the oil supply in history. And so, of course, when you have that big of a disruption, you're going to see huge consequences in the price of a barrel of oil. At the end of the day, when we look at this conflict, we are still in a really important stage of it, that being the stage of conflict pricing, the market hour by hour trying to figure out what is going to happen and what is the path forward. Obviously, the administration is trying to get us to turn the corner into the next phase, which will look like controlled de-escalation. Obviously, Trump has mentioned the Navy potentially ushering ships through the strait, talking also about putting more money into the reinsurance programs from the U.S. And of course, the IEA also announced this week the 400 million barrels of oil that they're going to be releasing from the strategic petroleum reserves, trying so much to get us into that controlled de-escalation conversation. But when I look at Brent at near 100, I just don't think that the street is buying that narrative just yet.
All right, thank you, Ted Thatcher, founder of Bright Lake Wealth Management, for joining us on NYSE Live.
Thank you.
Still to come, we'll talk Bitcoin with the Bitcoin Standard Treasury's co-founder and CIO, Sean Bill. He'll share about how his company is benefiting from Bitcoin's recent choppiness. And I also caught up with Alex Macedo, co-founder and CEO of Authentic Restaurant Brands at the ICR Consumer Conference in Orlando, Florida. He shared how his experience working for Tim Hortons and Burger King prepared him for ARB. And later on, two-time Olympic gold medalist Alyssa Liu joined Kristen Scholler to share what inspires her on the ice. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the Architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Bitcoin Standard Treasury Company says it aims to maximize the value of Bitcoin. And joining me now to share how is Sean Bill. He is the co-founder and CIO of Bitcoin Standard Treasury Company. Bill, welcome.
Hi, Ashley. Great to be with you this morning. Thanks for having me.
So great to have you. What is the function of a Bitcoin treasury?
Well, Bitcoin Treasury is about strategically allocating capital to Bitcoin as a long-term reserve asset. It allows a company to preserve value in a scarce global asset while maintaining exposure to the upside and growth of the Bitcoin network. So at its core, it's really a balance sheet strategy that combines capital preservation with long-term upside potential of Bitcoin.
And what sets you apart or makes you unique from other Bitcoin treasuries?
Well, we think that what makes us different is our active management strategy. So I think, we were the first one to come out with the idea that we want to use Bitcoin as an asset and try to capture yield and alpha from that asset. And so, we're actually looking to kind of take Bitcoin to the next level and have it as a actively managed asset within a treasury company.
All right, and we've seen some volatility in the Bitcoin space recently. How is your company perceiving it?
Well, Bitcoin is kind of a cyclical asset, and it does have a lot of short-term variation, as we've all seen. We went from 120, 126 at an October 6th highs down to about 60,100 at the lows here. So, we try to be a very long-term focused player in the space, and we try to use that to our advantage. So we'll be going public in April, and sometimes it's better to be lucky than smart. The timing for us is working out really well. Most of our competitors entered the space when Bitcoin was over 100,000, and we're hopeful that we'll be able to enter in the 60s, maybe the 70s.
All right, and how does current policy contribute to Bitcoin adoption?
Well, we've definitely seen, an evolution of the acceptance of Bitcoin within the financial markets and within government policy. So when I first proposed a 1% to 3% allocation to Bitcoin in 2019, people looked at you like you had three heads. This was a public pension plan in California. We were the first U.S. pension to put Bitcoin on the balance sheet. Now, 5 years later, 6 years later, you see BlackRock is recommending a 2% allocation. Morgan Stanley's recommended an allocation. Merrill Lynch has recommended an allocation. So we think it's moving to much more broader acceptance. And really, that's what will fuel Bitcoin's growth. It's, adoption, infrastructure development, and institutional participation.
Why do you think it's seeing more integration with mainstream finance? What do you think has changed?
Well, I think it's becoming better understood. I think it's still very early days in Bitcoin. Bitcoin came on the scene in 2009, and it's basically a teenager. So it's still really, really early in the Bitcoin ecosystem development. But now you have Wall Street analysts, the government, of course, with the Genius Act and Clarity Act, which we'll talk about later, all coming in and giving it a little more structure, a little more regulatory framework. And I think that's what's helping boost adoption in the ecosystem. So having ETFs is actually a really strong addition for Bitcoin because it opens up access to the retail investor that maybe wouldn't do it on chain directly.
And speaking of Genius and Clarity, how has that changed the game for Bitcoin?
Well, Genius Act was a huge leap forward. So, the new administration really has embraced digital assets, and I think wants to regain leadership in the digital asset space. Under the prior administration, we saw a lot of companies leave the U.S. and go offshore in pursuit of regulatory clarity. So now I think, hence also the name of the Clarity Act coming up here, right? I mean, it was clear that the reason companies were leaving the U.S. and we were losing out on this growth sector was that there wasn't clarity. And now you have the Genius Act, which has provided a stable framework for stable coins. And you have the Clarity Act, which will give us a lot more visibility around the market structure and how to use Bitcoin in the markets.
All right, and in our last 30 seconds, what will growth look like for your treasury in 2026?
Well, we hope to get public in April. We will be, going public in April, and we think that, we actually feel pretty confident that we're near a bottom right now in the Bitcoin market. We expect that 60,100 will likely hold, and that, we will then begin kind of the next leg up in Bitcoin, which, these are 4-year cycles. Really no surprises here. October 6th was matched up almost perfectly with the 4-year cycle top. And, seasonally, we should be bottoming in early April.
All right. Thank you, Sean Bill, co-founder and CIO of the Bitcoin Standard Treasury Company, for joining us on NYSE Live.
Thank you for having me, Ashley.
Earlier this year, I hit the ICR Consumer Conference in Orlando, Florida, where I also caught up with Alex Macedo. He is the co-founder and CEO of Authentic Restaurant Brands. They are a multi-brand restaurant group that makes acquisitions. He shared about his company's growth. Check it out.
It's a platform in which we thrive to acquire the strongest regional restaurant concepts in the United States. And then we deploy superior technology and data analytics to grow these concepts even further.
So what are some of the restaurants that you've acquired?
So we're up to 5 brands now. We have Pollo Tropical that operates in the state of Florida. We have Mambo Seafood, that's a Mexican-style seafood chain from Houston. We have PJ Wellham's, which is a family sports bar from Philadelphia. We have our oldest restaurant, Permane Brothers, over 90 years old, that operates in Pittsburgh and Western Pennsylvania. And our last acquisition, which we closed on last year right here at ICR, is Tavern in the Square, operates in New England, and it's casual plus dining concept that's very contemporary and entertaining, and it's been an amazing year with Tavern in the Square joining us in the portfolio. So we have 5 brands, about $1 billion in sales, and growing very fast.
What do you look for in a restaurant brand before you acquire it? Is there a common feature or characteristic?
Well, there's 3 musts, and then there's a like to have. So the musts are, first of all, it has to be high volume relative to its peer set. It has to be high margins relative to the peer set. In the restaurant space, we look for 20 plus restaurant margins. And then third, most important, it has to be a brand that's loved by the communities where it serves. So we have our own brand proprietary research that we do, but these are brands that people swear by, and they have a big role in their communities. So it's got to be a love brand. We say if people are willing to tattoo the brand logo to their arms, it's an our brand. And then what we really like is when these brands are extremely well managed, but done so in a non-sophisticated way, because that's where we can add the most value by bringing in, analytics, technology, and financial acumen. So it's a mix of both.
And speaking of that, what support do you offer brands once you acquire them?
So we first of all, we try to leave these brands very independent from each other because the management teams are fantastic. That's why we buy them. There's no turnaround stories. We try to keep everyone in the management team. We usually add people, we add resources, and we share best practices from the industry to turbocharge growth. So my team at the holding company level, we call ourselves almost a travel agency, in which our role is to get what happens all around the industry that works well and try to influence, our CEOs that are on the ground to implement those strategies and test those strategies to improve their performance.
How did you get into this line of work, and what excites you about it?
Well, I got into this line of work when I joined Burger King in 2011. I was the president of Burger King for, from 2011 to 2018. I was also the global president for Tim Hortons for a couple of years, and they say once you get into restaurants, you can't really get out, and I've learned to love it. Not an easy space to work in, but it's what I've done for 15 years, and I can't see myself doing anything different.
How have you taken the learnings from Burger King and Tim Hortons and your experience there and applied them to ARB?
I think the most important thing running a restaurant concept, at first you have to stay true to what the brand is. You can't try to be someone else because you don't have that chance. And second, you have to make sure you keep things simple, because executing restaurants on a day-to-day is extremely difficult. So if you start throwing a bunch of ideas out at the operators, at the menu, and everything at your service, you're probably going to hurt more than help. So what we try to do is really keep things as simple as possible and make sure you're sticking to the core of the brand. You're not trying to do something that you shouldn't be doing or trying to be someone else, because you're just going to lose touch with your consumers.
What do you think makes a great restaurant experience? And then you also mentioned casual plus dining. Can you break that down for us?
Absolutely. Yeah, we call casual plus or polished casual, which is a step above your traditional casual dining. But it's not fine dining, so it's not like white tablecloth or anything like that. But you dress up to go. You make sure you're looking good when you're going there. You're expecting everyone to be kind of in the same vibe. What makes a great experience is really delivering on the expectations. It's the basics, right? So you have to deliver on the service, the speed of the service that you expect from that restaurant. If it's QSR, you're expecting 3 minutes. If it's casual dining, you have a different expectation, but it can't take more than you expect. Clean environment, friendly service, and the right price. It's just the basics. And if you can deliver hot food at the same time and cold drinks, that goes a long way. But it's the basics. Again, if you try to invent too much, you're going to frustrate the guests on the basics, and that's when things, get off rail.
When we come back, we'll hear from two-time Olympic gold medalist Alyssa Liu. She joined Kristen Scholler from the rink at Rockefeller Center after her glory at the Milan Cortina Winter Games.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. As athletes arrive back stateside following the Milan Cortina Winter Games, the NYSE has been hearing from them. That includes an interview with two-time Olympic gold medalist figure skater Alyssa Liu. She joined Kristen Scholler from the rink at Rockefeller Center this month to talk about stepping into her power on the ice. Alyssa's business story is inspiring. She took a break between the Beijing Winter Games and competing in Milan. During that time, she came of age and began channeling her own creativity into her art. Let's take a look.
We're here at the rink at Rockefeller Center, and I'm joined by two-time Olympic gold medalist Alyssa Liu. Alyssa, welcome home and congratulations.
Thank you so much.
It's great to see you here in New York. Are you still riding that high from your wins in Milan?
Not really.
Why not?
I got to celebrate there on the ice with my teammates, and now I'm just home. I can relax and be chill.
Yeah. Good. Well, it was absolutely stunning to see you compete, and I love your story because you retired a few years ago, but then you decided to come back to figure skating, this time on your terms. How so?
Well, I wasn't able to pick my own music before, pick what dresses I wore, pick the programs I had, and this time I get to because I have my own, I have my own ideas and my own opinions about all that stuff, and it's really my art, and I am just here to express it.
Yeah. And we see that, just how at ease you are on the rink. What is that creative process like for you?
It's a lot of listening to music. It's a lot of dancing on and off the ice. And honestly, I get a lot of inspiration from my siblings and my friends, so I prioritize being with them.
What about taking the business of your art into your own hands is going to carry you forward?
I mean, I feel like things are better when, because I'm technically the artist, the skater, the athlete. When I have more control over everything, it just runs a little smoother. I know myself really well, so that helps.
Yeah. Are you taking a break? Kind of just in terms of, refueling after such intense competition in Milan?
Yeah, I mean, right after, I didn't sleep for 3 days after the competition, but then when I got home, I said I wouldn't do any media and all that stuff, and so I got 5 days at home of nothing. I just got to relax, so it was nice.
Yeah, well, we so appreciate you taking the time to talk to us. There's so many amazing moments. Of course, your performances on the ice were incredible, and just your camaraderie with your peers and your competitors in Milan was beautiful to watch as well, since it's Women's History Month now in March of 2026. Why is that important to you, supporting other women, including your competitors?
Yeah, I mean, it's really important because we all are just our own individual athletes, and we all just share the ice together, and we're all good in our own ways. And I really do think the more we uplift each other, the better we all get.
How heavy are these gold medals? I hope we can zoom in. They look beautiful, Alyssa.
Do you want to feel?
Sure, let me take a feel here. Yeah. Okay, where are you going to put these when you take them home?
I mean, I just put them back in their little box, and then I just store them away.
What's next?
I have maybe World Championships coming up. I have yet to fully decide if I'm going to do it, but I really want to. That's end of March. And then we have Stars on Ice tours, where me and the other Olympic skaters, we go and do programs all around the U.S. And that's coming up in April.
Do you have your music and costume picked out?
Yes, I do.
We'll be watching closely. Alyssa, you've brought the gold to us. So we brought the gold to you. This is the New York Stock Exchange bell. Yes, and we invite winners at the NYSE to ring the bell to mark the open and close of markets each day. We've got a gavel right there. Will you do the honors for us and give it a ring?
And I just hit anywhere here, right? Anywhere?
Yep, anywhere that feels right.
Okay.
You can do it more if you want.
I can do it more?
Yeah.
Do it.
Keep going.
Going out with a bang, Alyssa.
Thank you. This is fun to hold.
Yeah. It is a lot of fun. Our head of media has a gift for you as well.
On behalf of the New York Stock Exchange, we wanted to give you a challenge coin. And listen, you're more than up for the challenge. You brought gold home to us. We brought the bell to you, but congratulations from all of us.
Thank you. Thank you.
We really appreciate it.
Cool.
We'll be watching you, Alyssa. Congratulations again.
Thanks, Alyssa Liu and Kristen Scholler, for that interview. Thank you so much for joining us. That is going to do it for us on NYSE Live. It's been an action-packed show. We will see you on Monday with all of the news that is moving the markets, and you can check us out on any of these streamers on the bottom of your screen.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You worked so hard. to make so many people happy, and you make your communities better. What more could you ask for?